We will get quite a pullback at the start of the session. Around 70 points lower is where we're at on the SGX Nifty.
Only a close above the prior high, which is 44,151, which is also pretty much the all-time high, will confirm further upside.
Keep a 40-50 point stop loss. You get stopped out on the downside, but maybe risk reward could favor the bulls in today's trading session.
We think FY24 is also going to be a good year for CV industry.
And the first tick on the Nifty is a cut of 50 points, and on the Sensex, it's lower by 180, 190 points.
You're not getting that extra momentum, from global markets at the moment.
Q4 typically we have lower volumes heading into the new financial year.
The resilience of the global financial system has been severely tested in the recent times.
Let's bring up the mid-cap index, and you can see that once again that's holding very solid.
Dixon Tech, like other EMS companies, have reported a really good set of numbers.
The Biocon group is poised for a very strong growth ahead.
2/3 of our production is from Chhattisgarh, and monsoon is a big damage.
So the Nifty is down by 40 points. It has seen some more selling pressure from the top.
Well, that was the day so far. You're with us here on a fresh new edition of Closing Bell. We're coming to you live from the CNBC-TV18 Motilal studios. I'm Prashant. With me, my colleagues Surabhi and Reema here in the studios. Guys, hi. And of course, Nigel is joining us from the newsroom floor as always. Guys, Nigel, hi, good afternoon. So it's kind of difficult to say today whether the bulls have it or the bears have it, because you're off a little bit from the highs, you're off a little bit from the lows. Although at this point in time, it's more off from the highs than the lows. I mean, the Nifty is about 100 points, almost 100 points off the highs, and we're about 40 points off the lows at this point in time. I mean, it's not a decisive day on which one can read into for lots more insight or what's to come next. I mean, it's not that kind of a day. There are no real signs coming off the screen about what the market wants to do next. But we've given up gains by quite a bit. Off the lows early on and then off the highs a little later in the session. Now, the support level for the Nifty comes in at 18,199. That's simply the 20-day moving average. And that is about 200 points away from where we are, about 100 points away, beg your pardon, from where we are right now. That's the reversal. I've been saying this on the Nifty, Bank Nifty, both. And on the Bank Nifty, that's the 20-day stands at 43,511. These are your trailing reversal levels, stop levels that you want to keep. And of course, I mean, closer to it, if you want to test the waters, I mean, those are the best risk rewards to try and take support and for the market to bounce as well. But a close below these levels, I think, is what you don't want to see. Broader markets are in the green, but advanced decline is a clean 1:1, so not very much happening there. And of course, I mean, headlines around the debt ceiling will remain important, and be sure to hear a lot of it, especially in the US market session as we get closer to it in the evening. And of course, there are FOMC minutes as well, which I think will be important, but they take a backseat to what happens on the debt deal. Global markets, Reema, are also in the red, right?
Quite a tizzy right now. So frontline European indices are down close to about 1.5%. We're talking about the CAC, DAX and the FTSE, and they've opened sharply lower, 1.5% gone on the benchmark indices there, as investors are waiting and watching for progress on the debt ceiling talks. That said, the Indian market's performance over the last couple of days is fairly resilient. I was just taking a check on the week-to-date performance. That's Monday to Wednesday. The Nifty's been up 0.6%, while the CAC and the DAX are down 2.5% to 3.5%. The Hang Seng is down to 1.7%. The Chinese markets are down 2.4%. So the point is that despite all this turmoil that we're seeing in the global markets for the last 2 days, the Indian markets have actually been fairly resilient with a gain of about 0.6%. Another concern which has been added on is the fear of a fresh COVID outbreak in China. There are talks about some 65 million weekly cases, and that's raising fears about the possibility of demand getting hit over there. Commodities are taking it on the chin, consequently, given all this weakness in the global markets. The Nifty Metal Index, after a big run up on Monday and Tuesday, is currently down over 1%. That's the Nifty Metal Index. Adani Group stocks, particularly Adani Enterprises, it had a 40% run up over 3 days, but today it's now seeing some profit booking. The big drag is coming in from HDFC Bank. So HDFC Limited and HDFC Bank is dragging the financial stocks lower. In fact, the Nifty Banking Index itself is down about 158 points, out of which 125, 130 points is courtesy HDFC Bank. The Nifty Bank contribution plate will pull that, show you the impact that HDFC Bank's fall is having in taking down the Nifty bank. Pharma, on the other hand, has moved to the high point of the day. In fact, across the board, the numbers have been fairly strong, from pharma companies. Only Sun Pharma and Torrent Pharma are left to report. But, I was reading some Nirmal Bang analysis, and their research shows that for all the pharma companies under their coverage, US revenue has gone up 15% in constant currency terms. The India business has gone up in double digits, 10 to 11%. So pharma has actually clocked in a very good performance Q4 so far.
And positioning and timing is everything in the market, right, Reema? You have a sector that's been under-owned at a time, good numbers coming in at a time when there's a lot of uncertainty. And perhaps it just explains how money has been moving into the, the all-time, used to be an all-time favorite safe haven in the market. On the European markets, just the issue is, of course, this debt ceiling chatter, which doesn't seem to be getting resolved as quickly as markets had perhaps penciled in. So some of that nervousness is in place. And Reema, I just want to throw one more number at you. Inflation data is out in the UK. The headline number is better. It's much better than 10% or it's 8.7%. But, core inflation has inched up. And food and non-alcohol beverage inflation in the UK is 19%, 19. And that's a sobering thought, right? So it just tells us that things are far from sorting themselves out with respect to the entire, rates and what's happening with monetary policy tangle. Anyway, that's the global picture, which has led to a fair amount of caution in our market. I just want to point out 2 or 3 moves in the mid-cap arena, and we'll talk more about these stocks as we go forward, because again, today is a day where at the headline level, the Nifty is not making any headway around 18,400. But there are outsized moves in the mid-cap market. Pull up a Deepak Nitride, pull up stocks like maybe a Schneider Electric. Some of these are reacting to numbers. Some of them are reacting to, of course, corporate developments. For Deepak, it was investment in Gujarat. There's a Polyplex. We'll speak more about this stock as we go on. Promoters are selling half their stake. There's not even an open offer being triggered, and the market's quite upset. So very big outsized moves in the mid-cap market are the hallmark of today's action once again. Nigel, but I guess this 18,400, it's really proving to be formidable for one reason or the other.
Well, we mentioned this morning, right? So you require a bigger push or a bigger trigger. I don't know whether it's a debt ceiling or maybe it's a dovish Fed. I don't know what we could expect. I have a couple of triggers, right, going ahead. You have some uncertainty in the global markets, which is a bit of an issue. 2 factors out there, the debt ceiling and what the Fed will do. And the problem here domestically is we're getting to that monsoon season. And the fear is of a lower than expected monsoon. So that's the other problem that's plaguing us. For the time being, though, this morning the trade was pretty clear. If you get a dip, you look to buy into it and you'll make some money. And if you did that, you'll make some money. But that trade got over when we went closer to around 18,400. And as you mentioned, the bears did come in to defend that mark. So again, we're in that range. But the morning trade really played out perfectly for the bulls itself. But how do you position yourself in the final hour of trade from here on? Well,